Hello again, this is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is June 10th, 2020. We have three topics as we usually do on a daily update to provide market insights, what we are watching here for our clients at Blanke, Schein Wealth Management as we navigate through these markets both on a short and long-term basis. And what really matters as we see headlines on a daily basis, we sort of sift through that and we're going to bring you the daily headlines that we believe are truly going to impact and move markets. So let's get right into it. My first topic of the day, the Federal Reserve. Are they still dovish? And the answer is yes. They're going to be absolutely accommodative. As Federal Reserve Chairman Jerome Powell has released his minutes and then subsequent press conference a little bit later in this video today, I'm going to show you sort of real time behind the scenes, so stay tuned for that. But in the meantime, the things that we wanted to see, the keys of the Feds, are guidance on interest rates, reaction to are there green shoots in the economy, and so now what and how much more accommodations will there be, and ultimately will there be a return on the dot plot? And that's sort of a technical term to say, are they going to peg interest rates for the markets? And on the first one, guidance on rates, actually, it was market moving. The Federal Reserve Chairman came out and said they're going to keep rates long or low for quite some time, as much as 2 years now on a go-forward basis. Data dependent, I think, is the key. And as soon as he said that, we had an immediate knee-jerk reaction in the markets. You saw financials sell off. Why that's impactful is because banks can't make money if interest rates are low. So interest rates have to rise, at least longer-term interest rates, for the net interest margin. That's basically how they generate money on all of our deposits. And in the meantime, they're not making any money on our deposits because the interest rates are low. But then again, we're not making any money on our deposits at the banks anyway either. So, but you saw the real-time, I'll show you a real-time reaction on the Federal Reserve and the markets and how that made an impact. And ultimately, at the end of the day, the good news take home, not to spend too much time on this, is that the Federal Reserve is really committed on a both short and long-term basis to the two mandates. One is full employment, and the second mandate is inflation controls. Right now, we're in a deflationary period, right? Because the market and sort of is in a depressed, the economy is in a depressed state. And Jerome Powell was actually asked about the Great Depression. Is there sort of some similarities to this? And he basically says no. He thinks our economy, as he stated, was a lot stronger going into this. Therefore, he thinks we can handle this and withstand this with the right accommodations policies. And as well as Larry Kudlow today said earlier on CNBC, that there's more stimulus to come on a fiscal basis, so from Congress. So let's keep an eye on that. But right now, I'm going to show you how the Federal Reserve is moving markets. So let's watch. All right, so right now I'm going to take you behind the scenes. I'm going to show you my workstation, specifically the market as we monitor the S&P 500. And what I'm going to show you is very interesting. I've been providing daily updates, and in my daily updates, I'm showing the significance of what the Federal Reserve, Jerome Powell, the Federal Reserve Chairman, as well as what monetary policy has been doing. He just said very specifically, again, they're going to provide a backstop as for the markets and liquidity, and they're going to maintain full commitment through this pandemic. Now let's take a look at the workstation and see what's happening real time. As I keep pointing out, he moves the market, at least the Federal Reserve in the short term right now. So this is pretty cool. I'm going to show you this Federal Reserve Chairman right now, Jerome Powell. He is live in the press conference. The Federal Reserve just concluded a 2-day Federal Reserve meeting as normally scheduled, and they put out the minutes. And as soon as that happened, I'm going to show you my workstation here. I've got a chart up of the S&P 500, Standard & Poor's 500. And what I've done is oftentimes through the trading day, as we watch market moving news to see if it actually has an impact, I will take this down to a minute by minute. So I have the ability to take the S&P and go 20 years, 10 years, 5 years, 1 year, year to date, quarter to date, month to date, 5-day, 2-day. But I get to see, this is a minute by minute. So this is the minute by minute movement since the S&P 500 opened up this morning. And essentially it's just a normal trading day as we go through. And then we get the 2 o'clock Eastern reporting time of the Federal Reserve and their minutes. And initially the S&P traded down. And then all of a sudden, reading into the minutes, what the Federal Reserve is basically saying, they're committed. And so the market shot up. And that's why I'm showing this, that it's market moving all the time. But as soon as the Federal Reserve Chairman took questions, the Q&A portion, the market started selling off again. And that's oftentimes essentially asking point of clarifications to what the minutes happen to be released. But you're seeing that this magnitude of movement is not uncommon. So I talked about volatility will continue. This is one of the reasons. The Federal Reserve is going to still be there, but this is market moving. So we keep an eye on a lot of different markets. This is my workstation here, so all the different markets out there. But on a real-time basis, minute by minute, it's fascinating to see what happens when the Federal Reserve actually moves the markets. So it's a good opportunity for you guys to see that. So I just took you behind the scenes, if you will. And essentially, that's basically behind the mask. And what we're seeing behind the mask as well, and I'm going to keep speaking to this, is that markets versus the economy, there's a significant disconnect. I spoke about this weeks ago. And ultimately, clients kept asking, how could the markets keep going up? We don't understand. There's a major disconnect because if you look around, everyone knows somebody that's either been impacted negatively in the small business that they know, or the economy, or the restaurant, or unemployment. How is this the case? And my short answer was, the bigger companies get bigger. So size matters. If you think about it, S&P 500, I keep using that as a reference. Standard & Poor's top 500 companies, not only in the United States, but around the world, if you will. Think the big box stores, if you will. They're going to survive. In fact, it was a government mandated shutdown for all small businesses. And some of them are in the big boxes, are publicly listed companies. And they had the ability to keep their doors open because they were essential businesses. Well, that's an unfair advantage at the end of the day. They're, your competitor, if you think about it, just got kneecapped. And on the other side of that, you're allowed to access the credit markets. You could sell additional shares. You could go get additional lines of credit. You could issue bonds. And that's what corporate America just did. It was the largest single issuance year to date on corporate America debt that we've ever seen in history. So right now, what you're seeing is that the size matters and big get bigger. And that's where there's a market economy, and then there's the economy that we're all living in our local communities right now. And so I'm not saying it's right. I'm just saying that there's the very huge distinction between the small business and the big business. And big businesses have a significant advantage. In fact, that's what markets are saying, hey, that big business is not only going to survive because they have the additional capital to sort of get them through the short term, but long term, a year or 3, 5 years from now, that little competitor on the side of the street that happen to be the mom and pop pizza shop is not going to compete against those that can be there for a good long time and make it through this economic hardship on the short term, because they're going to pick up all that business in the long run. Unfortunately, that's what's happening right now. But there's the disconnect behind the mask, if you will, between the small business or the economy and the big business and the markets. So I hope that sums it up for you. My final topic of the day, copper. I spoke a few months back about copper being a leading indicator, something that we're going to be following here to actually see if there's some industrial production and manufacturing pickup around the world. And so think about this, it's a global commodity, right? So as the United States, you could be in California like we are, or somewhere else, and you look around and you're in a phase 1, 2, 3, 4 of a reopening, who knows? And then you get one thing after another. Is this business open? Is this business not? We're global, okay? So you want to look outside your little town, if you will, your little state, if you will. And that's what we do in the capital markets as we manage portfolios. And one of those indicators is copper. Why is this important? Because around the world, other countries are ahead of us as it relates to this pandemic. Why that matters is there's China and all the other countries that led on the front end of the pandemic. We actually want to see if they are, reopening their businesses. We're reopening our business. And more importantly, is there consumption? Is there demand for consumption? One of the factors is copper is a natural resource that industrially, it's in a lot of things. And so copper was strong going in prior to the pandemic, but it's coming out, and the indication of, copper demand is even stronger coming out. So we know in the United States, it's a slow moving indicator, but we're not looking at that. In fact, copper is a global natural resource, if you will, and commodity. And so it's one of those things that you look at to see, wait a minute. And oftentimes what happens is that the market follows copper down and up. So copper led on the way down, it's also leading on the way up. So the strong indication right now is we keep an eye on copper because it's showing us an indication from a commodity perspective, is there global demand for manufacturing and industrial production? And the answer is yes. So it's been a positive indicator, and we'll keep monitoring that as we manage portfolios. So thank you for staying with me today. Continue to like and subscribe. And if you want to share it to a friend and family, please feel free to forward this email to somebody who would benefit. So thank you again. Take care.